New economic data came out this morning. We got the unemployment numbers. We also got the jobs numbers. Bitcoin is reacting. Plus, we had Fed Chair Powell speak. We're going to talk about all of that in this video. Before we get started, though, welcome back to the channel. My name's Doc. Throughout the day, I'm a resident physician, and at night, and I guess on my lunch break, I take you guys on my crypto investing journey. Interesting Friday morning. We actually talked about this in my video that I published this morning, so I'm going to link that to the end of this screen. But we got our unemployment data that came back. The expectations were 4.1%. We came back at 4.2%, so slightly higher than expected. And you would think that with this data, the stock market would have crashed, which it is, and Bitcoin would be crashing as well. It's holding up decently though. So that's only one side to the equation though. Unemployment data came back higher than expected. The other side of that is the jobs data. And we added more jobs in March than expected. So that's a good thing, right? In a lot of ways, these things balance each other out. You would not know that though if you look at the stock market right now. Stocks are getting absolutely ripped. Tesla, the last time I checked, right now it's 12:30 Central Time as I'm filming this. Tesla was down 10%. Huge drawdowns in the day. The QQQ down significantly. Palantir down significantly. And a lot of altcoins are down today as well. Ethereum's not doing great. And I mention Ethereum because you might be thinking like, hey, Doc, I don't care about Ethereum. You do. If you're holding altcoins, you care about Ethereum, right? Because we all need Ethereum to get back above 4,000 before a true alt season happens. So we're seeing a lot of shakiness in the overall stock market. Bitcoin is holding up relatively well. The one thing that I will caution folks, I see a lot of this on Twitter and YouTube. People are putting in their thumbnails, Bitcoin, flight to safety, safe haven. And although it is very reassuring that Bitcoin is holding up better than the stock market right now, at this point in the cycle, Bitcoin is highly correlated with the stock market. Now, that does not mean it will always be like that. I suspect Bitcoin is going to start to deviate from the stock market at some point, but we are not there yet. I am personally chalking this up as a win for cryptocurrency right now. I really am, right? Bitcoin is above $80,000. That is a win. Here's what's tough. This morning, and again, I talked about this in my video that I posted early this morning, China announced retaliatory tariffs in the amount of 34%. And those are going to go into effect next week, okay? So that's why the stock market's tanking today. The real question is going to be, how does crypto react to that over the week and over the weekend? And more importantly, will a deal/negotiation be had between China and the US? And it's really more than just China. It's all of these countries that we're doing trade agreements with, right? The EU is a really big one as well. But all of these countries in general, when do negotiations start? So there's that. The other interesting thing is I thought Fed Chair Powell's speech, I listened to his speech this morning, it sounded neutral. And I would also chalk that up as a win because it was not hawkish, right? He acknowledged that the tariffs are there. He acknowledged that the landscape is changing quite a bit, right? With immigration, policies, tariffs. So it wasn't hawkish. I'm going to chalk that up as a win. The real question, in my opinion, becomes the next few weeks. Do we get clarification on all of this tariff shenanigans, right? I'm not as hopeful on that, but nonetheless, that's something we need to look out for. B, we have a ton of inflation data that comes out next week. Both core CPI and PPI inflation data comes out next week. And that is going to be incredibly important. And here's why. If inflation is higher than expected, it makes it tough for the Fed to cut interest rates, okay? And the reason that that's bad is the interest rates is one of the levers that the Fed uses to help control the economy. I'm using the word help there because they do not control the economy. They just have some levers to try to help guide things. If inflation's too high, it will be tough for the Fed to reduce interest rates, and that is bad for risk-on assets. To say that differently, risk assets like Bitcoin, like the stock market, they like cheap money, cheap capital, and high interest rates are tough to do that with. So that's next week, CPI and PPI inflation data. The other big thing that we have, and I'm not seeing like anybody talk about this, Q1 GDP data comes out April 30th, the last day in April, right? That's important because we are going to see what the gross domestic product is of the US for January, February, March. Now, there's been a lot of uncertainty throughout these 3 months, right? I would suspect that because if the stock market is an indication of anything, I would suspect GDP is going to be down, right? I really do think GDP is going to be down for Q1. The real question is how much, right? The Atlanta Fed is projecting negative 3.7% for the Q1 GDP. That's bad, right? The classical definition of a recession is 2 consecutive quarters of negative GDP. Well, if we get a Q1 GDP, we're already halfway there. And this is so important. Q2, if people are hearing the words recession in Q2, CEOs and businesses are going to tighten the belt, right? They're going to become more conservative. There's going to be less CapEx spending and less hiring, right? So the other thing that I think I have a really unique perspective on is kind of like the market psychology. Throughout my day job, I'm a psychiatrist, not to be confused with a psychologist, but I'd like to think I have a good understanding of this, specifically how fear runs in the market, right? As human beings, all of us, we are emotional creatures, right? And we react to fear in a negative way, right? You probably think to yourself, yeah, no doubt, Doc. But here's the thing. This is in some ways becomes a self-perpetuating type of thing. When we hear recession, inherently, we're going to spend less money, right? Us, me, you, I'm talking to you right now. When we hear the word recessions, we might think, okay, well, things are going to get tight. Maybe I shouldn't make any big purchases. I say that as I'm sitting in my new Tesla. Absolutely love it. Folks become more conservative with their spending. That just in hand weakens the economy, right? Weaker economy, that data gets reported on the news. We all see it. And then we think, gosh, I should continue to stop spending money, right? So it's a little bit this feedback loop that happens. We get Q1 data April 30th, right? So that's like another hurdle that we need to look through. Here's what I will say. There is a silver lining to all of this. The probabilities for a May rate cut, right? An interest rate cut in May, the probability of that is going up. Now, it is still not a favorable outcome that we get a cut in May, but the likelihood or the overall probability that a rate cut in May happens is increasing, right? So that's a good thing as well. So we have that. The other big thing is, right, this FOMC meeting, right? How is this going to navigate things? Ultimately, we need a change in sentiment, right? We need something big to change the narrative, right? We need something, Trump comes out, he says, hey, we're negotiating tariffs, we're rethinking things. We need the Fed to come, we need the Fed to come out and say, hey, we're going to reduce rates. It's really tough though. Right now we're kind of in this purgatory type of thing. We're kind of just treading water until there's a narrative change, okay? Here's something that I want to put on your guys' radars. Whatever you think of Trump, good, bad, or indifferent, and I've kind of already said that obviously I'm not a fan of the tariffs, given the fact that Bitcoin, cryptocurrency, and the stock market's falling. you kind of, so I've said that piece. The interesting thing is we don't know if this is part of a bigger plan, i.e., hey, let's pump the brakes on the recession to kind of force the Fed's hands to reduce interest rates, to stop quantitative tightening, and as a byproduct of that, get closer to quantitative easing. I don't think we're anywhere close to it, but we're getting closer. And Trump cannot directly affect what Chair Powell does, Fed Chair Powell, right? Trump can't say, hey, we're reducing the interest rates. But what Trump can do, and his cabinet and his policies, what he can do is tighten the market through these tariffs to try to force the Fed's hands. Look, I'm not saying I agree with it or disagree with it. It really actually doesn't matter what I think about it, because whatever's happening is happening, right? We just have to react to this in general. What am I doing? How am I navigating this? Well, today I'm buying a ton of stocks, right? I have a lot of cash on the sidelines. I am doing some buying today, specifically in stocks. Now, I get it. This is a crypto channel. You're following me for crypto. I am dollar cost averaging into plays that have been beaten down, big chunky plays, right? I'm slowly adding to my SUI bag. I'm slowly adding to my SEI bag, SEI. I'm adding to my AVAX bag. I'm picking up a little bit of XRP. I'm picking up a little bit of CAS, right? I'm even picking up some smaller tokens, smaller projects that I don't know if I want to talk about yet. Because, right, in some ways, I kind of feel like a responsibility that, like, I don't want to tell you degen stuff that I'm buying and then you buy and it goes down farther, right? So I feel like there is some responsibility for me not to just tell you everything that I'm buying. I am buying some small caps. If you really want to know what I'm buying, check out the Discord. There's going to be a link down below. It's totally free. We have nothing to sell you, right? We're just building a solid community of like-minded people who are trying to do well in this market. So link is going to be down below for that. It's totally free to join. While you're down there, consider hitting the like button and subscribing. It's totally free, costs you nothing, and it really, really, really does help me out. So that's kind of my thoughts in the market. I still think we have some hurdles to get through. I'm surprised that Bitcoin's still in the low 80s and we haven't hit the 70s. So that's reassuring in a lot of ways. We got to get through next week. We got to get through April 30th and the next FOMC meeting. But I do think that the end of April could be better. And I think, like, once we get through some of this stuff, May could be better. I also feel like we've been saying that all year. Like, we just got to get to next year. We just got to get to next year. Here's the thing. If you're still here, I'm glad you're still here. This is probably the most important part of the video. It's supposed to be tough, right? If the markets were easy to navigate, everybody would be doing this and we'd all be worth 10 million, 7 figures, 7, 8 figures, right? That's why it's tough, right? That's why not everyone's cleaning up. Slowly dollar cost average into plays that you think are good. If it goes down, just keep dollar cost averaging, right? Obviously, this isn't financial advice. I'm not a financial advisor. I'm just a doc throughout the day. If you got any value out of this, hit the like button, subscribe. It's free, helps me out, and I'll see you guys on the next video.